Welcome back to the Money and Wealth Show. I'm Sterling Fox. Our special guest this week is Bill Bonner, the founder and president of Agora Financial, who divides his time between Washington, D.C. and Paris, and is in Vancouver, Canada, to speak with us at the conference that your company sponsors here in Vancouver, the Agora Investment Symposium. What'd you tell investors this weekend? It's a skittish time worldwide for people. There's a lot of cash on the sidelines. What did you suggest as investment possibilities?
Well, I actually haven't spoken to them yet, but what I'm going to tell them is if they have money on the sidelines, they should leave it on the sidelines.
Okay.
This is just not nobody knows. First place, nobody ever knows what's going to happen in a market. That's what makes markets markets. You never know what they're going to do. But there are times when it's more dangerous to be in the market than other times, and this is one of those times. Everything you look at around, from federal financing to the big banks, to whatever you look at, they're all very, very dangerous. I don't know what's going to happen, but I do know that this is not a good time to be taking a lot of risk.
Okay, and thus the piles of cash on the sidelines. Business has a lot of cash too, Bill. They're seeming to be, they're running lean. They've just streamlined the operation down to the core essentials. They're holding a lot of cash. They're reluctant to start spending some of that cash on infrastructure, on staff. What is it going to take for business to get back more actively into play?
My guess is it'll take a depression. And what's happening now is that people are afraid, and they're afraid justly so, because we're in this stage of deleveraging. People, businesses, people, individuals, and the government now ran up too much debt. And when you run up too much debt, you eventually reach a point where you can no longer service the debt.
Right.
And then you're getting in a position where everybody gets scared all at once. They call this a liquidity crisis, but it's not really liquidity that's the problem. The problem is too much debt. And so when that starts to happen, there's this moment of panic. And I recall this moment of panic in my own personal life. It happened about the end of 2008. Lehman Brothers went broke, and all of a sudden you had to think, well, what would happen if the economy didn't recover, the stocks didn't recover, if the buyers just left out? And that moment of panic in a business is the moment when you get your key people together and you say, we're cutting out everything,
right,
and we're going to keep hold on to money because we don't know. And frankly, I think that's the right thing to do. Now, economists don't like it. This is the paradox of savings that Keynes talked about and worries people like Paul Krugman and Martin Wolf at the Financial Times. Because when businesses do that, individuals do it too. Everybody does it, and very soon, the velocity of money just comes to a crashing halt. And all of a sudden, you have this circumstance, which we know as a recession. If it goes on, we call it a depression. But what it really is people realizing that they've made mistakes. And so they're trying to correct those mistakes in the logical way, which is to take money, hold money, pay off their debts, get lean, get mean, eliminate operations that don't make any sense. That's exactly what they should do. Now, it does have a consequence, which is the consequence that nobody likes, which is you have high unemployment,
Yep.
You have prices falling, and it begins to feel like Japan all over the place. But that is an unavoidable circumstance of a free market. You have ups and downs. You have to have them. If there are no downs, you have something other than a free market. You have kind of a zombie market. You have an economy which you'll get if you have enough interference in it. That's what the Japanese did. The Japanese government refused to allow that stage of the downturn of the market, when people start holding money, not wanting to spend. So the government came in with massive amounts of spending to try to encourage people to spend, try to get the economy going again. Of course, it didn't work. It never works. That's not the way these things happen.
Well, there hasn't been growth in Japan for decades.
17 years,
okay.
No growth.
And is there any end in sight? And I suppose the B half of that question, Bill, is that what we should look forward to here in North America as a possible remedy?
Well, so far, it's not a remedy. I mean, it's a mistake. And the remedy to a situation of people having too much debt is the debt needs to be destroyed.
Okay.
That's what a recession or depression or crash, it wipes out companies, it wipes out debtors, it wipes out all kinds of people, it wipes out creditors. The banks go broke. The banks have lent too much money. That's what you need. That's clean, it's simple, it gets it over with, and all the people get up off the floor, dust themselves off, and then you can have a real growth cycle again. But until you do that, you have these companies, and Japan has had this for, as we know, for 20 years, banks where nobody knew exactly what they owed and who they owed it to, and didn't know whether the bank was solvent. The companies didn't want to grow because the market was shrinking. That can last for a long time, and I fear that that's what we'll probably have in the U.S. And maybe a lot of people would say, Paul Krugman would say, well, that's fine. They like that. That's controllable in a way.
But it doesn't represent the sort of dynamic entrepreneurship that America stands for in the world.
No,
I mean, the American economy, the whole world looks to it because that's where the most dynamos go to play.
Yes, and it has been true. As you mentioned, I live in Paris, and a Parisian who's got a lot of energy and a lot of ambition, he moves to California. And then he gets to work on some sort of project and becomes rich. But that stage of the America as the dynamo, that stage is probably coming to an end, because now we have an economy very much like the European economies, with lots and lots of regulation, lots of red tape, lots of high expenses, and a government that's refusing to allow it to adjust to the new circumstances. The new circumstances, by the way, are that we're competing with 3 million Asians who work for less money. They move faster, they're better educated, they have higher savings, they don't have all this bureaucracy, they don't have the kind of high cost that we have built in. You try to start a factory in America, good God, it'll take months and months and years to get permits. Imagine you're starting a factory to do work in the chemical industry. Mm-hmm. Good Lord, it'd be very, very hard to do that. We live in anywhere in North America, includes Canada. We live in a Europeanized kind of world here, and it's a world with high cost, rigid, and difficult to adjust, and it makes it this kind of Japan-like zombie, I call it a zombie economy, because you have so many people who earn their money as a result of some sort of special deal. They've been disabled at work, they're early retired from the government, they've got a special contract, they've got this, they've got that. Europe is full of these people. Sure. Every farmer earns his living from subsidies, not from growing stuff. It's a little of both. But that's what you end up in, these zombie economies, where everybody is kind of organized by the government, by these special plans, by these handouts and these arrangements, which turn them all into kind of zombies. They're no longer fully active. They're no longer fully free to make their decisions.
Our guest this week on the Money and Wealth Show is the founder and president of Agora Financial. Bill Bonner is with us, and there's more to come. We'll be right back.
Good afternoon. My name is Larry Ray. I'm the president and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.